Hi, everyone, and welcome to the Wealth Clock with Steven Weinstock. I've been investing in real estate for more than 20 years in everything from single family homes to multifamily properties to launching my own real estate investment fund. This show is sponsored by the We Capital Mortgage Fund, where we invest in bridge loans that have already been vetted. Every borrower, every property, every deal has gone through full underwriting, including appraisal review, credit checks, verification of past performance, and a complete analysis of the real estate that secures the loan. Our goal is to give investors access to safe, consistent returns backed by strong collateral. There we have a guest who brings a valuable mix of real estate experience, tax knowledge, corporate structure expert, and a deep understanding of the business structure. Svi Weiser has more than 20 years of experience. 20 years, okay. Across real estate, software, e-commerce, tourism. Am I seeing this correct? And publishing. Okay, I'll ask you about that. He is known for making complex tax and structure topics clear and simple for investors. We'll ask him about that. And we'll ask him about the latest and greatest of what's happening in his field, since it seems it's always ever changing, sometimes with the stroke of a pen by some of the people we elect, and maybe sometimes even from the people we don't elect. Thank you for joining me.
Thank you for having me. A pleasure to be here today.
Okay, I've seen you on LinkedIn. I feel like I know you. I've seen pictures. I even know which part of the world you live in. But for people meeting you for the first time, let's start like this. How do you describe the work that you do simply?
Sure. We start in the beginning. In the beginning, there has to be a company, an LLC. That's where we come in. And like every beginning, when you're in the embryo, every slight move is very critical, or else you come out some way you don't want to. So we try to get people off on the right foot, shape their ecosystem that they'll live in, and make sure it stays secure throughout the lifetime of the business that they will transact.
How'd you get into the business?
How I got into the business. I was doing 1031s, and I was always really fascinated by the structures because we would get some very complex 1031 deals, and I was really interested in how structures work. So I really took a deep dive into that. And next thing I knew, I was working for an LLC filings company.
So you started off in this industry in the 1031 business?
Yes, I did. Yeah.
What was your role? Were you trying to find investors that needed your service? Were you dealing with the actual paperwork and what's allowed, what's not allowed?
Right. So I have a law degree and a legal background, and my role was the back office. We were in charge of processing, creating the documents for the 1031 deal. And we had a team of about 7 guys working for me in the heyday, we were doing about 25, 30 deals a day.
Around what time frame is this? What year?
2020, 2021.
Got it. Yeah, definitely a busy, fun time, especially for everybody in the who services real estate transactions. It was probably a great time.
Yeah, we
And
were busy.
yeah, we should definitely get back there. Things are working cycles, and if you do it long enough, you get to hit it twice, sometimes three times. When you're dealing with investors, when they ask you questions, are they knowledgeable when it comes to 1031s?
Not at all. I think today probably more so than then. We would do so many deals at the closing table where the investor had no idea what a 1031 was. And maybe the lawyer would say, how about a 1031? And somebody would bring it up and they'd say, what's that? And like they'd get the 1 minute version and they'd say, hey, that sounds good because we're planning to do another deal very soon. So let's do it. And we would literally process documents in 1 hour. I remember when I first came to the company, they were always under pressure. They would tell me, this is a rush. We got to do it in an hour. I'm like, come on, this is prepared for about 2 weeks or 3 weeks or sometimes months beforehand. And when I was in our main office in New Jersey, I was sitting waiting to talk to the CEO. I was looking through some of the pamphlets, and I saw the 1031 pamphlet, and I see it specifically said we turn around documents in an hour. So I realized that when these people wanted an hour, they meant it because that's what we promised.
You ever feel that investors, they just assume 1031 is as simple as I take the money, yes, I can't touch it, I have a certain time frame. It does start to get a little more complicated when you have to start figuring out what the debt amount was on the original property, what the equity is going to be. Are you taking any of it out? There's even something called a cashless 1031 where there's no proceeds, but I guess there's already profits factored in. Are you constantly explaining and teaching when it comes to investors who are like me? I'm talking from experience, these questions, because I've done quite a few 1031s and there's always something new I'm learning. Whether I can't do it, I have to do it this way. I thought I could do this, but it has to be done this way. Can you talk a little about that? That definitely interests
Sure.
me.
My role is not client facing, so I didn't do it firsthand, but I know what went on. And there's always, no 1031 is the same. There are no two 1031s that are the same. And like you said, the amount of the investor understanding and knowledge, it's really a holding hand, a teaching and explaining. And some of the rules aren't intuitive. And then people get upset, like, why? This doesn't make sense. But they're giving you a tax break, and this is the way they want it, and this is the way it is. This is something that really followed me from 1031 to LLCs, because again, it's the same thing. The government gives you a gift called an LLC, and you got to follow the rules, whether you like the rules or not. Or you could say, wow, you don't really like the rules? No problem. Just don't have an LLC, or just don't do a 1031, and then stand on your own 2 feet and figure it out.
Okay, you mentioned LLC 3 or 4 times in the last 30 seconds. So I know you transitioned from 1031s into, I guess it's called LLC filings. And explain, I guess, tell me how you made the transition and what exactly are you doing today other than strictly just filing an LLC? There's obviously more to it. Give us a little breakdown.
Right. So now I'm actually doing the opposite of what I did back then. I was hired to help them build out the LLC business. We started out in Riverside as Riverside Filings, which was part of Riverside Abstract. When you have a title company, the clients often need to form LLCs, and they started doing it as a service. Once they hit a certain amount of business, they realized, okay, let's have this as a standalone business. They created Riverside Filings. Riverside Filings basically did all the back office, and just like you said, strictly the filings and the compliance. And we were very in our box. We didn't do anything else. Somebody wanted an entity, just call us. We didn't advise. What we've been doing since then, and especially since we moved to NUCO, since we broke off and became an independent company, my role is really to educate the people, to help them understand what all this stuff means, and to help them strategize and make sure that they do things right.
There's obviously different types of LLCs. There's S corps. Tell us a little, give me a little history lesson of, what we should use, what most people are using, what's the cheapest version.
Right. So the first thing I want to say about the LLCs that people should know is really the cost is so minuscule that should never be a factor in how you have your LLC strategy and what you do. We're talking about a few $100 either way, and nobody ever died. Nobody ever went bankrupt from having too many LLCs, but lots of people went bankrupt from having too few. So that's rule number one. Cost is not an issue. Just to give you an idea, a filing could cost you $150. So we're not talking about major investment over here. We're talking about small change. To some people, $150 is a lot of money too. So that doesn't work for them, but that's narrow-mindedness or short-sightedness on their part. What were we talking about?
The difference between the
Oh, there we go.
LLC.
Yes. Okay. We deal because of the reason why I got into that background is we deal, I would say 95% or 90% with real estate people. Okay. So everybody talks about S Corps, and everybody's neighbor knows about S Corps, and everybody's friend told them they should have an S Corp. When it comes to real estate, nobody should have an S Corp. That's a big no-no. S Corps are fantastic, but they're the exact wrong tool for real estate investors. For example, S Corps, what S Corps really essentially are made to do is when you have an LLC, you have to pay self-employment tax. It's all considered salary. So you're paying 50% self-employment tax to the full max. When you have an S Corp, you can give yourself a salary, and then the rest becomes passive income, and therefore you don't pay self-employment taxes. But in LLCs, it's all self-employment taxes. So there's no reason for an S Corp. More than that, when we talk about real estate, we talk about depreciation. If you have an S Corp, you are going to hurt a lot of the depreciation strategies. You're also not going to be able to have a capital stack because all shares are the same. So you won't be able to have a preferred equity. You won't be able to have uneven allocations of loss and gain. And Another big problem is moving properties in and out of an S Corp. That becomes a taxable event. When you have a regular LLC, it's not a taxable event. So what real estate investors have to know is that the S Corp is not for them. They should just drop it until they get into a different line of business.
So for real estate professionals, LLC seems to be the most simple, the most recommended, and like you said, it costs a few $100. You ever see real estate investors for any reason wanting a different structure? And for them, is it because they know what they're talking about, or they just don't know what they're talking about?
So there's two different things that we can break this down to. If we're talking about LLCs versus C Corp or something like that, there are times that you would want a C Corp in real estate because you don't want to pay taxes on if you're going to continue to reinvest and you're building something, you'd rather keep the taxes inside the company and pay 20% annually in order that your money could compound faster. That's not usually the case, and that's only for certain cases. The main question really, and the main strategy that we talk about in real estate for LLCs is how to structure your entities. We're not talking about just getting an LLC and starting to buy real estate. We're talking about how to set up LLCs for what different parts of your business. We're talking about stacking LLCs and having holding structures. We're talking about single purpose entities for every deal that you get into. That's what we mean by entity structuring generally when we talk about real estate.
So you post something on LinkedIn, something that affects New York real estate investors. Let's talk about that.
So we had the Corporate Transparency Act, which was in the news for the better part of last year, where the government said that every LLC has to disclose all their beneficial owners, which means anybody that owns 25%. And that came under a lot of scrutiny and a lot of challenges. And there were court cases saying it is constitutional. It's not constitutional both ways until Trump came in and just pretty much ditched the whole thing for American investors. And they kept it really just for foreign investors. But what the states did was the states were pretty upset because the government was not going to share this information with the state. Now, commerce usually belongs under the state domain, not on the federal domain. But they were able to somehow pass this law based on national security rather than commerce. And the states were upset. Well, this is really a commerce issue, and you're not going to give us the information? So the aggressive states, as always, and you could probably tell me them right off the top of your head, New York, California, Massachusetts, went ahead and they said, okay, we're going to have our own beneficial ownership interest laws, our own transparency laws. And not only that, New York, for example, said that ours is going to be part of a public database. It's not even going to be hidden information. So
Oh, wow.
so they passed this law about 2 years ago. The problem was that it was all built upon the federal law of corporate transparency. And basically, they didn't bother writing anything. They just said, as says in the Corporate Transparency Act. So when the Corporate Transparency Act was gutted, their law became a worthless shell because it kept referring to things that didn't exist. So in New York, for example, they went ahead and they passed an amendment. The problem is they never brought it to the governor. And the question is why? And it's still sitting there, has not been brought to the governor yet. Now, officially, the law goes into effect on January 1st, 2026, which is why you'll hear people rumbling and talking about what's going to be. Why is our filings company, why are lawyers, accountants, why are they not telling us about the Transparency Act? In the meantime, there is no law. They can't go back to the old law because that's worthless. The new law has not been brought to the governor for whatever reason. And even if they come up with a law and they pass it, they now have to build the infrastructure, the computer infrastructure, the database to handle this, the filing of this. It took the government, I think the federal government, about 2 years to do this. And they do it a lot faster than states do. They were federally funded and they can move fast. I think New York understands that they're probably not going to build this, especially now that they're standing out there by themselves. They got to come up with a law. They got to come up with an infrastructure. I think we're not talking about any transparency on the ground until 2030, in my opinion. But we'll see where this goes.
We spoke offline. You told me you're a born and raised New Yorker. We're both from the same borough, both from Brooklyn. But you're working an American business, or you're living elsewhere. Tell us where.
I'm in Jerusalem, Israel.
Oh, wow. Wow. What a shock. Okay. Out of all the countries in the world, that's where you ended up. Okay. I wouldn't have guessed.
I was down to a short list of about 7 or 8 when we decided Israel at the end.
Yeah. Okay. There's always Mexico. There's always Venezuela. There's always, I'm sure there's a minion somewhere over there. So you've been there, you're working East Coast hours, New York City hours, which means you get to have a whole day almost. And then at 3 or 4 o'clock, you got to be busy for what, till 10 o'clock, 11 o'clock, maybe sometimes even later. But you get to do a lot of work throughout the day if you have to. But it's pretty peaceful. I was there visiting, and the time difference makes vacation a lot more fun because you're not busy till 3, 4 o'clock. No. You travel to the States for work ever, or is it just personal stuff?
I generally don't travel too much. Today we're in 2026. We can do a lot of stuff from right here.
Now you're living there for a while, so I don't know, take us back, I don't know, 15 years. Were you still working an American business, American job?
So there was a time in my life where I basically flew every Saturday night to the West Coast, and then I spent the rest of the week flying the red eye from the West Coast to the East Coast, from the East Coast to London, and from London back to New York, to Israel.
Oh wow. Oh wow. Now this is not the 1031 business.
No, that was a software company.
That's got it. Okay, wow. Well, how long did you do that for?
About 3 years.
Okay. So you racked up the frequent flyer miles. That's pretty nice. Okay,
I
good.
did.
Good. All right. So everyone at the airport knew who you were. So now you're living over there, having a great time, enjoying the first half of the day, working the second half of the day. That's pretty cool. Yeah, I bumped into a lot of people who I assume they're in my backyard and they're thousands of miles away, and it's so seamless. It's easy. I'm almost jealous. So that's why I'm harping on this point.
To me, it's the opposite. I'll get on a Zoom with a client and I'll look out the window and say, "Where are you?" And I'll find out it was one guy, he was literally around the corner from me.
Exactly, exactly, exactly. I've seen you on LinkedIn a lot. You're definitely active. Has LinkedIn helped your business?
LinkedIn is my business. I
What does
would
that
say that
what does that mean?
most of my clients come to me via LinkedIn.
That means what? You're emailing everybody proposals all day long. You're
No,
just
I'm getting inbound from LinkedIn. We'll do some outreach every now and then, but it's a lot of inbound.
yeah, yeah. You're active, but not in a annoying way.
I
And
try to add value.
right, yeah, yeah, you're adding value. And every time I see your name, I see I see what you do. That's definitely a way to get leads. And like I said, you're very active on LinkedIn. I'm enjoying. What kind of content are you writing or commenting on that connects with your audience that's given you success with LinkedIn?
That's a loaded question because I see LinkedIn in a different way than some other people see LinkedIn. LinkedIn to me is a big billboard, it's a poster. So you get to advertise free. And the people generally, the people that you interact with and you engage with, it's quid pro quo. So it's not really any value to either side other than you're helping them boost their audience and they're helping you boost yours. So I would say the engagement that you see in my on my posts is not really what I'm aiming for. It's great and I need that, and you need the following because that gives you the credibility that you are the LLC guy. And when your posts are highly engaging, then people say, wow, this guy must know what he's talking about. Whether he actually does or not is a different story. But in general, given that I can write anything on my LinkedIn and probably get the same amount of comments, and people don't even read it and don't even know what they're commenting, and that's all good by them. So I really try to connect with the people that you don't see commenting on my posts, and that's why I try to make it educational, to teach them things where they'll reach out and say, wow, I saw you write about this, and therefore I called you up because it's very relevant to me. So I use my content in one way and then the engagement in a second way. But believe it or not, a lot of the people that actually engage with me every day are all clients.
What are some mistakes that investors make when it comes to LLCs? Give me like 1 or 2 mistakes. Common.
The first one is compliance. Just to give you an idea, we have a client from LinkedIn who has a fund. He has about 80 LLCs. He called us up. We did an audit for him. 20 of them were dissolved. They didn't exist. Now he's running I don't know, $1 billion fund. He has people's money. He's invested in all these deals, and the LLCs were dissolved. It doesn't get worse than that,
Wow.
right? We put him back together again, and now we manage all his LLCs for him, which is just like typical what happens with what we do. We give a free audit, and it's free until we find all the problems, and then they ask us to fix it up, and then they become a client. So it's a pretty straight path from free audit to loyal client.
For someone who's overwhelmed with some of the compliance issues, what's the simplest starting point?
There's no easy answer, because the answer is that this is really critical, but it's really tedious and really easy to mess up. And most people give it to their administrative assistant, who doesn't appreciate the importance of it and tries their best to keep up, but doesn't always keep up. Like I said, most people that know us and have multiple LLCs just say they give it to us. We have a portal, we manage it for them. We can do it seamlessly without them even knowing. We could do it where we just tell them everything that happens, and then they could decide what they want to do, if they want us to file, if they want to file, and just keep them in the loop. And people get all kinds of spam emails, and we get emails from clients on a daily basis saying, I got this. Is this real? Didn't I just pay you last week? And we tell them, yes, it's spam, ignore it. And people get used to that. But the people that don't understand that, they like just throw up their arms, and they just don't even bother with compliance anymore, because it just seems to be, they just can't. They're overwhelmed, like you said.
Okay, so I'm going to give a different answer. The simplest starting point is probably just to reach out to you and have you deal with it, and tell everybody here how they could reach out to you. Give us your LinkedIn profile, your, I don't know, phone number, email, whatever you want to share. I'll also put it in the notes if you're active on TikTok or MySpace, or if you still have a Hotmail email address, whatever you want to share with us, go for it.
Okay, you can find the easiest place to reach out to me is on LinkedIn, and that would be Tzvi, Tzvi LLC Weiser, Weiser. You could reach me by email at tweiser@nucofilings, nucofilings.com. And you can call me by phone. That would be 516-690-6106.
Got it. Now, LLC is not your legal middle name, correct?
Actually, Tzvi is not my legal name either.
Ooh, okay. Okay. We got a nickname. Okay, that's fine. That's fine.
My mother
Okay.
preferred that. My mother preferred a different name to the one that my grandfather was named. So my legal name is actually Daniel,
Got it.
which is
Yeah,
another
yeah.
funny story by itself.
Yeah, just in case you're elected president, you got to have a secular English name. Exactly. Okay. I've been there. I'm living practice of that. See, it was great to have you on the episode. Thank you
Thanks for
for
having me.
Thank you for zooming all the way in from Jerusalem, Yerushalayim, Israel. I love it. I love going there. I was there last week from the time of this recording. I did not go to Hebron, but I was still in Israel for that week, which is very nice.
I got two more books shelves over here, one on the left, one on the right. If you ever decide you want to come here, I can reserve one for you.
I actually went to Rabbi Eli Stefanski to do his daf that's why I went to Ramat Beit Shemesh over there, and that's always a highlight of my trip to Eretz Yisrael. As someone who does the daf Yomi, learning one page of Babylonian Talmud every day. For anybody out there who doesn't know what I'm talking about, it's a worldwide program. We do one page a day. It's a 7.5-year cycle, and it really keeps me structured. I really love it. And that's some of those wonderful, colorful books that he has behind him that you would think, since he has a legal degree, that those are law books, but no, they're law books of a different kind. It was great to have you on. Thank you very much. Thank you, everyone, for listening to The Wealth Clock with Steven Weinstock. We will see you on the next episode.